Hello, and welcome, guys, to the 96th edition of the Trading Opportunities webinar. This is your host Nirav, and let me just quickly check the audio and technicalities at my end before we proceed with the actual webinar. Looks like we are live on LinkedIn. Let me check on YouTube. Yep, working with the audio. So, guys, officially welcome to the 96th edition of the Trading Opportunities webinar, and let's get started with the very quick disclaimer here on screen. So here's a disclaimer. Basically, all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purpose, then you yourselves will be liable for your profit, your loss, or loss of profit. Rest of the stuff you can just read as the disclaimer is on the screen. Now that we are done with the legalities, let me get started with a very quick introduction, guys. So my name is Nirav. I'm the admin and owner of the website 50eyes.com, as well as the YouTube channel 50 Eyes Market Analysis, where this broadcast is currently being done alongside my LinkedIn page. And just in case you want to connect with me on LinkedIn, you can just find the link here on my website 50eyes.com. Here's the LinkedIn option. Also in the YouTube video description, you can find it. So anyways, getting on with the introduction, we conduct these webinars. These are called trading opportunities. This is a series of webinars that I have been conducting for quite some time now. We conduct one webinar every week on every Friday at 2 p.m. GMT or 7:30 p.m. IST. So just convert it to whichever time zone you are in accordingly. Okay. So this is how we have been doing these webinars every Friday, 2 p.m. GMT or 7:30 p.m. IST. And in the past 96 webinars, we have captured 200 trades literally. So just check the results of what we discussed in 95th webinar, and 4 of the setups played out precisely. We'll discuss them obviously in the today's session. So 196 was the score till 94th webinar. So this 95th, we have actually touched the 200 mark. So basically 200 in 95. I think the average is around 2, roughly speaking, of course. So with that being said, let's move ahead. Yeah, there's also this thing. So I've been keeping a track record of all the past webinars, etc., on this spreadsheet since 2016. I've been doing it. Actually, started the channel in 2015. Started covering the markets in 2016. So we have an accuracy of 80% plus for consecutively 6 years. As you can see over here, this spreadsheet contains what do you call the name of the instrument, the date when the analysis was done, the link of the video, and the analysis itself. So I'll just go to the top. Yeah, this is the analysis itself. This is the outcome, and this is the link you can check. So everything is very transparent and publicly available. So I just show it off because it is much higher than industry standards. Generally, people have accuracy around 60 and they call it above average or whatever. But this is a public record, and I haven't came across any public record like this for 6 consecutive years. Anyways, so that's about that. And lastly, if you want to learn more on how I analyze the markets, about my particular area of expertise, which is Elliott Wave, you can always go ahead and check out my video course, Elliott Wave course, in the course section. And I also have a book on Amazon called Think with the Markets, right? So it is available on Kindle edition, so you'll get an instant copy of it. You can read it electronically. It's only available electronically for now, right? But keep in mind, the book is not what do you call written for complete beginners. You gotta have some knowledge of the basics to go with that. Right. So with that being said, let's move to the last part. The stuff we cover in the webinars will be Euro USD, followed by crude oil, gold, S&P, Nifty, and eventually we'll look at Bitcoin chart. So these are all the charts we cover on a regular basis. And lastly, thank you guys for continuously sharing my work. I am seeing lot of improvement in our number of views, and I will request that you continue doing your part and continue sharing the webinars. And the way to share is you can either share the YouTube link. You can go to my YouTube handle at the rate of 50 eyes, or the YouTube channel. You can search 50 eyes market analysis, and within that you can hit on the live button, because we are doing live broadcasts only currently. In the live button, you can just then select the last webinar, which is 96th in this case, and you don't want to open 96, right? It's currently being broadcasted, and then hit the share button. So I request that you share it with at least your contacts, right? So that way we can have a good reach. The share button is always below the video right here. And if you have a traders group on Slack, Discord, or Telegram, or whatever you guys are using, then kindly share it there. Otherwise, share it on your social media X, which was previously called Twitter, or Facebook, or whatever you guys are using. Right. So with that being said, let's now head over to our actual webinar and start the actual discussion. So let me load the actual chart of Euro USD. So here's the first chart that we are going to discuss, the chart of Euro USD. And as we always like to do, we will check what we said in the last webinar and then see how it went from there. By the way, I am looking to go long later on this. So anyways, let me just quickly show you what we were discussing in the last webinar first. So this is the 95th webinar, recording of the 95th webinar, basically, which was again conducted last week, 29th of December 2023. On Euro, we were discussing Euro somewhere here. Let's play the video and see what we were saying on Euro in the last webinar. So I already know, I checked it before today's session, but just for record keeping, I'm showing what was discussed last time. So basically what we were discussing last time was that's enough. So what we were discussing last time was that the market is in a flat correction, which is an A down, B up, and C down. I'll just draw the stuff here on yellow. This is me currently doing drawing on the recorded section. So this is what we were expecting. The market was at that time somewhere here, and it has actually gone down, so it worked out, but I had to just show it for the sake of record. So now let's head over to the actual chart, and let me show you the level we were discussing the markets last time. It was 29th December. The time was somewhere here, I think. Yeah, somewhere here. So somewhere here we were doing the discussion last time, and as I said, the market should go down. It did go down, and I was able to take shorts and make profit on it. As a matter of fact, right before we started this webinar, like 20-30 minutes ago, we booked profit somewhere here. There was a sharp leg down. We all know the event, etc., etc. And what was the case was I had multiple positions open: short on euro, long on crude oil, short on S&P's 500, and short on gold. So I closed the euro shorts in profit, the S&P shorts, and the gold shorts in profit. I'm still long on crude oil, by the way. We'll discuss that when we go to the crude oil part. So anyways, the idea is that if this correction is complete, which may be the case, then I'll be interested in taking longs on this counter, and we'll be considering the longs seriously above 1.09863. Right, so above this level, I'll look to consider longs. I am currently not holding any position on this counter. The reason is that it is still possible that this market has one leg down remaining, because I'm not very convinced with this wave force placement. Although it does look like it may be complete, but I would like to wait a little bit before considering other scenarios. So on the short side, I can look for shorts below or near the low. So if the market takes out my alert on the downside, I will probably look for some scalp shorts, right? And from a swing perspective, the market has only one leg remaining, so it's better not to take positional shorts here, only short-term intraday scalps, right? So even if the market goes down, I'm expecting a possible quick reversal. That's the expectation right now. Of course, things can change, and also a straight up leg is also possible. Both cases, we wait and watch. We wait for long setups. and will consider them strongly or seriously above this level. That's about it for Euro. I don't think there's much to add. I seem to have gotten some comments here. Hemang is saying, "Hey Nirav, hey Hemang, how are you doing?" And Kannan J is saying, "Gold went down for a minute. Yes, rebounded all the way." Do with what you said or didn't say, it was the NFP data move and its reversal. So what I said was, I said 1 week ago, and if you don't believe that my analysis is of worth any value, then just don't show up here. Nobody cares. So, anyways, continuing back with the analysis, what we had was Euro completely discussed. So we'll just go on to crude oil, where currently there's a long in play. So, as always, I'll just like to discuss the market from what we said last time. Okay. So, last time when we discussed crude oil, let's quickly have a look at the chart somewhere around 25. So, this was the discussion on crude oil, not the clearest count, I should say. And I actually did make it very clear that we are not very clear on this discussion. But let me just play it to see if there was something mentioned. Yes, there it is. So what we had was a wave one up here, and we were expecting that a wave two was continuing here to the downside, right? And there were two main support levels which were mentioned. One was this white support region here, and the second one was the 69.47. Now I was again able to capture shorts here. We were short on it for quite some time. No, actually the shorts were short lived. Then I turned long. So the long trade was the main one which I'm currently holding. But the more interesting thing was that the market actually did go to 69.47 level and literally reversed from there. Literally reversed from there. So let's just quickly look at the actual chart there. So here it is. This was the first support region. The expectation generally is that the market will reverse somewhere within this region. But in this case, it penetrated, started taking resistance. Let's see. Started taking resistance at this level and then went down. So overall, what we saw was market going down and then reversing. And why I'm saying it's not the clearest of the multiple analysis that we discussed is because this leg down is not completely in accordance with the plan we had in mind. I mean, we were thinking that it will go down, but there was no surety that it will go below the white support region, as I said. My primary bias was that it will probably reverse within the white support region. But anyways, our second target did get hit, and it literally reversed from there. Afterwards, there was this deep leg down somewhere here. I added longs, and I'm holding longs. And in case the market goes below 70.64, I'll probably look to exit as a what do you call a stop loss. Currently, I think it's placed around 70. So, what's the story here? What the story is that we are expecting a leg up from here, right? Wave 1 or A, 2 or B, and then 3 or C in the other direction is what we're expecting. So if we consider this as the point of reference, which is the starting point of this analysis, then we have the first leg here, correction here, and the next leg here. What I'm really discussing here is the concept of Elliott Wave's impulse, right? Impulse is a five-way progression in the upward direction, and if I draw it, 1 second. Yep. So this is the rough outlook for an impulse, right? As you can see, we are currently expecting that this is the third wave in progression. And again, if it's a corrective leg up like a zigzag, still it will have the leg up, which is here, which is remaining pointed out by this arrow basically. So that's about that for crude oil. I can discuss some targets. I probably have some setup here. Yes, we have some resistance levels drawn here. Let me just point them out quickly. We are looking for a resistance around 77.879, or what do you call 77.88, roughly speaking, to 81.2. So this is the level we expect the market can, what do you call, show some resistance, probably some profit booking, but that all remains to be seen. But the most important thing is the target minimum here, which, as you already can see, is the last high or last recent high, which is around 76. So that will be our target minimum. Probably take some profits off here. That's generally what I do. Take some profits beforehand and leave some positions to ride along and see how things pan out. So nothing much to add here. Sort of going as expected, and we'll just see how it goes from there on. Charles Lee Rocks is asking, is it necessary to be rude? I'm not sure who is he commenting on, me or the other guy. But listen, guys, I don't really care what you think about my work. If you like it, come here. If you don't like it, just I don't really care, right? Whatever the other guy was saying was incorrect. So of course I don't like it, and I don't see any need to justify anything, right? We are looking at things with proof. So your comments are kind of useless here, Mr. Kannan, not Charles. So, anyways, let's now head over to our discussion of gold. So, as always, we'll just look at the last discussion and then see where the market went from there. Basically, if it did do what we were thinking or if it did not do. So, gold we were discussing somewhere around, let's see, somewhere around 38 something. And there was a clear sell setup. I recall that very clearly, but I did not take the short because I did not want to carry forward. And let me see if this recording has it. Let me just speed it up. Okay, so this was the main setup which we were discussing in the last webinar. Let me just delete the current drawings. So this is the recording from the 95th webinar, as you can see on the bottom here, right? And our discussion basically was that we were expecting a down leg here below 2064 was the current price level when we were doing the discussion or the live discussion. And the basic idea was that this market is heading down for a possible impulse. Some other possibilities were also there, but this was the main theme or the main idea because it was part of a bigger correction. If you are following these counts, so we have been following gold for quite some time, and this is a flat correction in play. I believe it is part of that flat in the C wave, right? So let's now check what happened. 2064 here, right? And this is our current chart. So let's just point that on the chart. 206. Yep, there it is. So here is where we were looking to short. The basic idea was that I wanted to go short in the next session, which was on Tuesday because Monday was a holiday. And then obviously the market did go down. We entered shorts, and then there was a triangle again, and I entered shorts again. So there were actually two real trade setups which we got out of this market. And that's exactly what I was pointing out to the viewer who was making unnecessary nonsense comments here. Next time I see anyone, I'll just simply block them because these people are unappreciative. They don't know what I'm doing here, what I'm saying. They'll just come around and try to show off that they know better than me or something like that. I don't know what these guys' problems are. So, anyways, this was a short which I was saying we took and was in profit. And this was a second short which was taken from this triangle, which was again closed in profit on this news event, right? And by the way, to know what will happen on a news event is also analysis, right? Go try doing that yourselves. Lastly, what I did feel was that we were expecting the target was around 2023. Obviously, I closed it because there was a spike and the event was. Events generally are like that. You better book the profits or trail. Even the trails don't work in these cases. But what I do feel like if the market does reverse from here, that will be kind of showing a bullish sentiment. Although I'm not planning to go longs on this counter. Let's just talk it from Elliott Wave perspective instead of just talking things here and there. Yeah, one thing interestingly, this was also the thumbnail image of the webinar. Let me show you. There it is. This is the triangle here. I'm not sure how much you can see. Yeah, there it is, the triangle image. So this was the short trade, also the thumbnail image of this webinar. We figured it out when it was only in this starting stage, right? Anyways, so what we were looking for was the overall count and how it affects our analysis. So overall, what we are expecting here is that the market has our point of reference placed around what is this 2079, and what we are expecting is a correction which is either complete here or it's still continuing. That's the second hypothesis or the second case scenario. Now, what we are originally assuming is that this possibility is of the flat correction. So in the flat correction possibility came the idea that this is a 1, this is a 2, and we are heading down for a impulse, right? 3, 4, 5. So basis on that, we have a lot of downside remaining. That's why I said I'm not really particularly interested in looking for a long trade right away. Maybe on intraday basis, definitely, but from a positional perspective, not yet. So what we are seeing here is a possible continuation for wave C down, possibly as a wave C of a possible flat structure, right? That's our main hypothesis here. Now within that, we already have the wave 1 placed here, wave 2 placed here. Now there is a secondary thing which I want to point out, which is quite important at this point, is that maybe the C got completed here, right? If the wave C is complete here, then we can look for longs from here. That would basically mean, let me just remove this. That would basically mean that this market can just take off from here. But as I said, we do not have a confirmation for that possibility. And secondly, these things are supposed to be impulsive, but this structure, while not very clear, we were able to count it a little bit more on the side of a correction. So basically, long story short is while there's a setup looking for suggesting longs and a setup suggesting wave C continuation, basically suggesting shorts, there is no clarity for longs just yet. So overall, we are not interested in longs. Now coming to the shorter time frame, we can have a little bit more of the perspective here. I think 1 hour should be enough. Now this is the impulse which is currently complete already here, and the idea is that, one second. So the idea is that if this market is really heading down, like an impulse, like a 1 down and then 2 up and then a 3 down, then this is just the dot 1 of the whole structure. Then there will be a dot 2 and then there will be a dot 3. You get the idea. Basically, I'm talking about the fractal nature of Elliott wave structures. And once we have the 3 here, we will get a 4 here and then a 5 here, right? So I'll just explain it by the way. I don't think everybody understands what I'm saying. So what I'm saying here is that this is an impulse down. Let me show you with the circles and everything. This is the circled 1 complete over here. 2 is over here. And 3 is over here. And 4 is over here. Right. So this is the basic assumption. In case the market goes down, that is what we are expecting it to go down as, or the structure we are expecting it to go down as. And within this continuation, we are currently in the wave 3. We are currently in the circle 3, right? So within this circle 3, what we have is If we expand the circle 3, we'll see waves 1, 2, 3, 4, and 5, which I have labeled here as dot 1, dot 2, and so on and so forth. So this is what we call the fractal nature of Elliott wave. Basically, waves 1, 3, and 5, they have their own internal 5 wave structures within them. So that's basically the definition of the fractal nature of Elliott wave, right? So in gold, in case this analysis is working out, this downward analysis which we just made an interpretation of is working out, then let's come to the point. We'll be interested in shorts only below the level of 2027. I will not be entering any positional shorts. Obviously intraday is a different story, and positionally I'm only looking for selling it again below 2027, right? Unless second scenario would be that we are able to precisely capture the wave two's reversal, and that will be another thing. But that's not something I can what do you call discuss in here in a public webinar. It's a lengthy discussion, and obviously it will require multiple updates, which we do in Slack. So as I was saying, we are looking for shorts positionally only below 2027. And another reason is that if you guys remember, we had another possibility which was suggesting that if the C is complete here, then this market can just take off from here. So keeping that in mind, we want to be very sure when we go short, right? So basically, the way to be sure in this kind of a scenario is to see a break of the recent low, which is 2027 in this case, right? And as far as the longs are considered, obviously the same setup implies we'll be looking for long above 2084, but that's a long way from here. So and necessarily I'm not considering it as a strong possibility right now. We will see as things go. And an extremely short term perspective, we expect 3 waves in the upward direction as a correction. But again, I won't comment on it. So the main setup remains positional shorts below what is this 2027, and intraday wise, I'll probably get some trades here, probably some intraday shorts maybe, and some intraday longs maybe. That all remains to be seen. I can't comment on that right now. So with that being said, we are done with our discussion on gold, and we can now move ahead from here to S&P's 500, where we had some. I'll just check it when we get there. Let's see. Yes, where we had bearish movement a little bit farther than expected. So let's first of all open up the chart and see what we were saying on S&P last time. So this was the idea on S&P, and I'll get to why I'm saying a little bit not as expected. So we were expecting a bearish movement on S&P, as you can see on this count. And I do remember I had a minor long position also placed in, which was stop loss hit after the webinar actually. I think it was 4780. Yeah, 4780 was the stop loss if I recall correctly. So anyways, what we were thinking was that if the market takes off and basically takes out this alert high, then it will be a strong bullish impulse, and that's why I had a small long position placed. But if it does not do that, then the second idea was that this market is probably heading for a flat, in which case we were expecting this C leg down, which you can see here from this recording of the 95th webinar. Now what really happened was the market did go down. However, instead of stopping somewhere midway, it had a strong leg down, which is why I'm saying that not precisely as I was expecting it to be. Although halfway it did go lower. But anyways, here's the count here on screen. As you can see here, let me correct this. So this was the time when we discussed the market, 29 December, somewhere here we were discussing this market around 47.95, 97, something. And from there on, we do seem to be having that flat correction in play, which we just discussed. The basic idea was that in case the market is continuing as a flat, then the main probability would be the market can stop somewhere here, basically midway or 50%, 60, 50, 61 dot of this leg up. However, what we did get was a stronger moment to the downside, right? Now, with that being said, let's now have a quick look at what this market is currently doing. And by the way, I did have shorts placed on this market somewhere here. I think 47. Let me check. This was, I think, a scalp, and this was a positional. Yes, I had shorts at 4696, and then book profits at 4672, whatever. So these were the shorts which were happening here. By the way, we did have multiple shorts here, as you can see. Multiple trades were placed on it. Of course, that's what we do all day long. So, anyways, the point here being that my expectancy at the point when I booked the profits was that most likely this market is still having more downside remaining, as you can see with this count. However, the current leg up is very fast and strong, which is basically suggesting that probably our count was not correct. So, we'll have to have another look at it. I mean, I'm not really saying this is the right count or anything. I'm just trying to rearrange it for a sec here. 1 second. And then we'll see what's really going on it. So I'm not, I don't think this can be counted as an impulse anymore. So the second idea which I have, I think, I believe this is possibly 1 second. Just push it there. And then this will be your A of a lower degree and B of a lower degree. And then heading for the C of a lower degree. So just out of my current quick outlook, obviously I'll have to check it in detail later on. What I believe is happening here is what we have is a lot of overlapping price action, basically suggestive of continuation of a correction. And in this particular case, this is the only main theme I can think of is this market is heading lower for A, followed by wave B, which will then be followed by a wave C down. So this is basically a corrective structure in Elliott Wave terminologies where we have a flat in progression. Flat is basically 3 legs down, 3 legs up, followed by 5 legs down. So the first leg down is called an A, next correction up is called a B, and the next leg down is called a C. In this particular case, we were first assuming that the B was complete here, but it looks like the B may be continuing sideways. And by the way, guys, if it does complete without going near 47, 83, 84 something, then it will not be a ABC, but then it will become a complex, right? But I'm not really interested in discussing that because it's just a nomenclature difference. It's not a real difference from setup wise. So basically, what I'm saying here is that this market can go here a little bit more up and then fall, or it can just go a little bit up and then fall, right? So both cases are possible. And the long story is that the downside may still be remaining. That's the main theme which I can think of right now here. Second possibility which is possible here is that the B was already complete originally as placed here. 1 second. So the second theme will be that the B is already complete here. And the C is already complete here. So this will be the second theme here. But as I said, I'm not very fully convinced with this placement of C here. And again, I'll have to relook at it. And it does look like it may be possible to count it as a diagonal. But then again, I will have to check the internals and see. So this becomes a sort of secondary analysis here at this point that the C is already complete here. The main theme becomes that possibly this is still heading up for a correction and then it will be followed by a down leg, right? That becomes our main theme. But overall, I have no trades placed here on S&P right now, and I will look to place trades later on. Short term basis, I will look for longs as no matter If the C is complete here or still continuing, we still have some upside remaining on this counter. So yes, intraday wise, I'll look for longs on this counter, but overall, I'm not very clear on this, and it's sort of a wait and watch here. What I can do say with clarity is that below 4671, I'll definitely be considering shorts. But then again, that's kind of obvious. So wait and watch on our S&P's counter, and we'll look for more information. The main two possibilities I've already discussed. So with that being said, let's now head over to our discussion on Nifty's 50. And as always, before continuing forward, let's just have a look at what we were discussing in the last webinar on Nifty. So basically, the story was the same on Nifty as well as S&P. We were waiting for both of these to show some clarity or show their hands, basically. And I recall the analysis was, although you will have to completely check it yourselves in the recording because the discussion was quite big from here till here, 6 7 minutes or something. So the basically the whole theme was that if S&P takes out the high, then it's a long, and then it's we'll also consider long trades on Nifty. But if it does not take the high out, then we don't really know what's going on, and it's better to wait for the Monday session. So we had some analysis done. Let me just play it. The basic theme, I'll just discuss the basic theme which we discussed was that the analysis is basically the same as Nifty equal to S&P. So long above highs. If no high is broken on S&P, then no trade. And the other theme was that if the high is not broken on S&P, then we consider this as a flat continuation. This was the rough outlook of flat, and this was the wave C. I'll just draw it with the yellow. This was what we were thinking it will go down for the C. Now looking at the chart or the actual chart, this is the A down, and obviously we know that the S&P did not break the high. This is the B up, and this was this. This is what we call the C down here. Now again, there's a nuance in it. We are not 100% confirmed if the C down is complete here. There is a possibility that this is further continuing as a nested formation. That is, this is just the wave one of the C. This is the two of the C, three of the C, and four of the C, and five of the C. So basically, that's just something we have to deal with at this point. But it's kind of not going to be that hard because if the market has completed the C already, then we will very soon see a break of the last high, which is currently around, let me just remove everything, which is currently placed around 21838 something, roughly speaking. So above that level, we will be looking for longs on this counter. But if the market does not take that out, I'm not very positional bullish, or I'm not going to hold bullish long or basically long positions if the market does not take that high out. Of course, I can take intraday longs, etc., etc. But the main level we'll be looking for is the taking out of that high. Same goes for the short side. I'm still considering the bearish count, as you can see with the red counts displayed on screen, and we'll be looking for short setups below 21565. So it is again a wait and watch kind of a market, as both possibilities are still open. We are long above 21838, short below 21567, or considering shorts below 21567, I should say, to be clear. And with that being said, I think yes, Nifty is also a wait and watch, so we should keep it as it is, and I'll discuss it later on. With that being said, let's look at our last chart, which is chart of BTC or Bitcoin, which, by the way, was exceptionally strong, and then it just reversed exceptionally strongly as well. So let's have a look at it and see what's going on this chart. So basically, let's just load the last discussion. So this is the recording of our 95th webinar. Again, we always do this. We always check the recording first before jumping on to the current discussion. So this is where we were discussing Bitcoin, and I had basically two outlooks which I discussed. One was that this is a triangle, and then we'll head up from here. Second outlook was that this was a possible complex correction, and this I'll just draw it on the recording using the yellow color. So Second outlook was that it can just go sideways within this box range and then shoot up, right? So here, as you can see, the triangle setup was suggesting that above 43,800, it's a long. The flat setup, or the, I should say, the complex setup was basically suggesting that above this box range is a long, which I think was 44,800 something. There was also the possibility that this box range may expand, but again, you will have to watch this whole recording for that. The main gist was that if you are looking for intraday or short-term longs, then above 43,800, we can start looking for what do you call taking short-term longs above 43,800, and positional longs can only be established once the market goes and takes support above this yellow support zone, right? So that was that. Now let's head over to our actual chart and see. So the short-term possibility played out precisely. As you can see, the market did go above 43,800. Let's see, where is that? 43,800 is somewhere here. So the market did go above it, right? And then the market has established itself. No, I wouldn't say established. It just went above it and touched our target. What is this target? Is that is actually the target minimum. It has reversed from 45833. Now keep in mind, guys, I'm not a very keen trader on BTC. I very rarely place trades on Bitcoin. Other things which we discuss, I do place a lot of trades on them, but Bitcoin is sort of the least active thing here, right? So I was not observing it in great detail, just did the analysis and left it as it is. But from what we can see, it did go and touch our target minimum, which is currently around 45833, right? And the next target is 46473, which it has not touched. However, what is interesting or worth noting here is this strong rejection of price, which is not a very bullish sign if you ask me, right? The sell off, well, while the sell off is expected around the target levels because there is always profit booking, it is kind of looking impulsive nature, but still not completely giving a bearish sign. What I do really mean by it is that if we recall our past discussions, we were suggesting that there is a box range here, and I did mention very clearly that this box range can extend a little bit up, right? So what I can see here is that this is a possible expansion of this sideways movement of the complex correction of basically the box range, and this market can still continue sideways within this range. So while we did get some short-term long setups above this triangle break, which we pointed out last time, this is still not a very clear market, and still the market is still possibly continuing sideways. And on the bearish side, there is now the possibility that if the market had completed the upside leg here, because after all, technically it has taken out the last high of 44,750 something. Basically this high is what I'm pointing at. So given that fact that this market has already taken out this high, there is the possibility that this could have been the next high, and then this market can show a deeper reversal. I'll just change the color here. This market can show a deeper reversal, then just go within this sideways range and then go up, right? Again, I do not have any evidence for it. The only thing which we can say with some certainty is that if the market takes out this high of 45,421, I'll just type it here, then we can plan longs here with some conviction, with our immediate upside target placed around 45480. So this is the only trade setup which is clear here. Apart from this, a lot of possibilities exist. This can just remain sideways. This can just go down from here. But the long setup is the only one which is clear. And these are the levels we look out for. So with that being said, that completes our discussion for this webinar 96th edition. And those of you who are liking the content, make sure to hit the like button. And I will highly appreciate if you guys can share it with the people who are in your trading groups, or those of you who are what do you call themselves associated with the friends or colleagues who are trading, right? Your constant support is definitely appreciated. And thank you for watching till the end, guys. I'll see you in the next one. Take care.